I'm sure we all know about Sir Isaac Newton. Sir Isaac Newton was a genius, but even he lost millions in the stock market. Let's find out how a genius mind like Sir Isaac Newton went flat broke chasing a stock bubble and what he had to say. Time and again we come across Twitter where which keeps popping up with various high profile and some new investors losing their shirts by falling prey to some quick returns and investing in asset classes they don't completely understand. Some examples today are cryptocurrency, to some extent multi-bagger stocks as well. But it's shocking when you witness a high-profile investor who identifies a bubble, perhaps even makes money out of it, exits in time, and then gets sucked back only to lose everything in the resultant bust. An early example is the case of Sir Isaac Newton and the South Sea Company, which was established in the early 18th century. The South Sea Company was granted a monopoly on trade in the South Seas in exchange for assuming England's war debt. Investors warmed to the appeal of this monopoly and the company's shares began their rise. Britain's most celebrated scientist, Sir Isaac Newton, was not immune to the monetary charms of the South Sea Company, and in the early 1720, he profited handsomely from this stake. Having cashed in his initial investment along with a sizable gain, he then watched anxiously as the stock in the company continued to rise. Newton then went on to repurchase a good deal more in the South Sea Company shares, at more than 3 times the price of his original stake, and then proceeded to lose £20,000, which in 1720 amounted to almost all his life savings. This sudden loss and miscalculation got him to a stage where he shared, "I can calculate the movement of stars, but not the madness of men." The chart of the South Sea Company's stock price and effectively of Newton's emotional journey from greed to satisfaction and then from envy and more greed ending in despair is shown above. The stock markets are driven by emotion, and greed and fear are the two emotions that play an important role. As Shakespeare's Polonius counsels his son in the play Hamlet, "To thine own self be true." We need to remind ourselves we are investors and not speculators, and we need to act accordingly. As Warren Buffett, the father of investing, has shared time and again, invest in decades. Long-term and proper asset allocation is the key to success. You don't plant a seed and then keep digging the soil ever so frequently to see how it is growing, do you? You would destroy the plant in such a scenario. The same applies to your money. Give your money time to grow. In the words of Sir John Templeton, to buy when others are selling in panic and due to fear, and sell when others are greedily buying, requires the greatest fortitude and pays the greatest reward. So our message today is think long term and let the power of compounding work its magic for you. Diversify your risks and invest based on your risk appetite and time frame in line with your goals and purpose. It's a fairly straightforward choice. It helps to work with a professional financial coach who understands you and can guide you. The goal is simple: to help you achieve financial freedom and a healthy, wealthy, and stress-free life, no matter what happens. Let's get financially smart.